Greetings in all manners, class, depending on the time of the day that you are accessing this recording. This is for your exam prep. Please note that no theory will be covered in this session. We just want to be as practical as possible so that you are ready for your upcoming written exam. Right. I shall share with you a few tips for on how to successfully write a written exam. One of those would be you need to be able to not panic. I would say that again, you should not panic. It's very important to look at the paper, to look at the questions, and see which ones are easier for you to start with and those that are harder questions that you would like to leave. Basically, you need to decide whether you're going to start with the difficult questions or you're going to start with the easy questions. My own preference is I would rather start with the difficult ones because they will take me plenty of time, but that's not it because you need to remember again, you need to be smart as you're tackling your exam paper. You need to look at the marks. So the questions with the most marks, obviously, will be those that you would rather spend enough time to make sure that you get the majority of those marks. And the questions that are very easy, that they're very easy and they're not quite time consuming, you know that you can leave those for the end, right? But you need to be quite smart the way you're going to tackle your paper. So don't spend too much time. Look at the marks allocation. So if a question has a very does not have quite a lot of marks allocated to it, don't waste too much time on that particular question. You see, because that time could be devoted to covering. I've seen students, taking so much time to complete a 5 marks question than they spend in completing a 30-mark question. So that tells you that you are not efficient in the way that you are using your time if you would proceed that way. So the best way to proceed is that make sure that you spend enough time. If a question is too difficult for you to handle, then you can leave it aside. But again, look at the marks. Some questions they are not extremely meaning that you cannot necessarily figure them out, but it's just they will take you a bit more of time to figure them out. All right. So that's the first thing. There is a matter of not panicking, of looking at your paper. The second tip would be read, read, read. I repeat again, read, read, read. Read the question properly and especially comprehend what they are asking you to do. That's what is more important. You see, I've seen students answering questions that were not asked whatsoever. So read, read, read. You do not need to worry about these tips. I'm going to send them to you in an announcement so that you can see them. But it's very important for you to read the question properly and comprehend what is required of you and to think before starting to write your paper. So I hope these are quite important tips for you. The last one I'm going to share right now quickly is the fact that your calculations, you need to do your calculations a couple of times just to ensure that, just to double check that you are correct. So if you are using a calculator and you make a calculation, do it the first time, do it the second time, and the third time, then you are pretty much sure that the answer that you are getting is the correct one. I've seen that through your assignments that some of you are losing marks because you did not simply do the calculation properly. and it seems to me that you just failed to double check your calculation. All right, it's pretty normal that when you're writing a paper and you have numbers in front of you, that somehow you might punch in the numbers incorrectly, or you might be in a rush to finish the calculation, that you would miss something. All right, so it's quite important for you to go back and to double check your calculation. So that's it. So that's the 5 minutes to just give you a few tips for your exam paper. But let's go straight into question one of last year's paper. Um, I have added, as you can see, I've added few annotations, for you. Please feel free to look at these. But again, let's start by reading question number one. Although for your exam, you are not required to start with question number one. You can start with question number seven or question number five. Just make sure that you indicate that this is the answer for question number seven. All right. So, but question number one, obviously the following are the total purchases figures for Red Limited, right? For the past 3 months. These are given to you. You have April, May, June. What is given to you is also what is budgeted for July, August, and September. Okay? You are provided these additional informations that are very important, that 20% of all purchases are made in cash, 20% in cash, 80%. Obviously, if 20% is cash, 80% would be credit, meaning that it's debt you will need to repay. All right? Okay, and you've done a similar question for your assignment, but remember again, a few things might be affecting you. Okay? The first thing is, what is the question? The question says clearly to you that you need to prepare a schedule of forecasted payment for purchases from the period 1st July to the 30th September. So you are not required to do for April till September. You are only required to do for a quarter of July to September, only 3 months. So just make sure that that will be your focus, right? So as the answer sheet shows you there, this is well done. It shows to you that July needs to be your focus, August needs to be your focus, and September need to be your focus, right? Okay, so one other element that is provided to you is that the creditors, because remember the 80% that you need to pay or repay needs to be settled in a specific way. 35% will be settled within the 30 days, with an early settlement discount of 2.5%, which is allowed by the creditors. So this is a very important thing, okay? And then it says that for the next 2 months, which is 60 days, it's going to be another 40% that you need to settle, and you will settle the remaining 25%, you will settle it within the 90 days. All right, so that's pretty straightforward. What you need to understand is that somebody who, for April, for example, the total purchase was 300,000. Okay, 20% of it needs to be paid cash, which is 60,000. As you can see there, I'm indicating on your screen that 20% needs to be settled directly cash, which is 60,000. 60,000 is 20% of 300,000. Okay, again, remember the numbers. 20% of 300,000 is 60,000. 80% will be 240 that need to be settled later from the next month, uh, uh, and then the next 60 days, and then the next 90 days. All right? Okay, so meaning that, but remember, we are only concerned when you look at the credit purchases, you will see that 80% of all the total purchases is already provided here. So from the month of April to the month of September, So the 80% are provided to you here, as you can see. So if you can see on your table here, as we're looking at it, you can see that April is 240,000, May is 320,000, June 80% of the total purchase is 400,000, etc., etc. April, we know that April, for April, the first settlement for April will go to May. So 35% will go to May. But we are not putting it here because what we are interested here is only those 3 months, that quarter of July, August, and September. So we ignore completely. And as you can see with the errors that I'm showing, 35% minus the 2.5 discount that is allowed by the creditors is going to be due in May, 40% will be due in June, and only the remainder 25% will be due in July. That's the reason why we only focus on the 25%. So we understand that 25% of the credit purchase of 240,000, which is 60,000, will be due in July. All right, so will be due in July. The same as for May. Uh, 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 but for May, we know that, look again at the error. For May, the credit purchase, the first settlement of the credit purchase will be due in June. But we are not interested in June. We are interested in what is happening from July upward. So, meaning that we will ignore the 35%. We will be just interested in the 40% because the 40% will be due in July. As you can see for May, in July, we will start with the 40% and the subsequent month of August will cover the 25% that is due. So you understand this reasoning. What is more important for me to tell you for question number one? You've done this already in your assignment paper, but I just want to repeat this because I've seen few mistakes. The discount that is offered, for example, for June, for the June total purchase, the credit purchase of 400,000, the first installment is due in July, all right? Then we will have that 35%, right? Cool. But the problem is that they're also offering us a 2.5%, right? So what you can do is you can take the 400,000, you find the 35% of it. Okay, you can do it that way, and which will give you 140,000, right? 140,000, and then you can minus the 2.5%. Or what you can do is just this simple calculation that you see here, is that 100% minus 2.5%, which is the discount, gives you 97.5%. The 97.5% is what they are asking you to it's basically what you would settle with taking into account the early settlement discount of 2.5%. So taking the early settlement discount, you just minus 2.5 from 100, which gives you 97.5%, and 97.5% of 35%, which is the settlement that you need to the first settlement within 30 days, you will get 34.125%. So this is the quick way, all right, that you can use to, so you will take the 400,000 multiply by 34.125%, okay, which will give you the same exact amount here as the 136,000. But in any case, you don't need to worry. You can take the long route and the short route. It does not matter. You feel free to use both of them, okay? But you should come to the same answer, all right? Basically, this becomes therefore a question of just aligning properly. As you can see, purchases for July July, after July, it's August, so you will start with August for the first settlement. For August, the first settlement will be in September. So just make sure you are aligning July settlement, August settlement, and September settlement correctly. But at the end of the day, you will have the total payment to the creditors, um, the cash purchases. Remember again the cash purchases, because when you add up everything here that you've calculated for July, you will get the payment to the creditors plus what you basically paid cash will give you the total forecasted payment. Okay, so easy. And guess what? That's 20 marks. Just make sure again you show your calculations. If you're hiding your calculations, you will lose marks. So I've repeated this so many times. When you are hiding your calculations, you are not showing your calculations. It's difficult to know where you got the answers. And should your answer be wrong, we can't give you marks because we don't know how you got to that answer. And even if you get to the answer without showing the calculations, you're losing marks. So I trust that that's clear. All right. Okay. So for part B of question one, you would like to borrow 250,000 to purchase a vehicle for your retirement and have been offered these interest rate by the following three banks. Makes sense. You've done this. You will have gold, silver, and bronze banks that's going to offer you different rates. But what you need to understand again is how are they compounded, right? Are they compounded quarterly, biannually, or monthly? And if, remember again, this formula, obviously here it's the period that matters. You're looking at a period. So you will take 1 plus the rate that is offered to you, uh, meaning that let's say for example for gold, it's compounded quarterly. You know that the number of periods quarterly, the number of period is 4. That's quarterly, a quarter. All right. Every quarter for a year, you have 4 periods. So that's what you should focus on. Biannually, the number of period is two semesters, right? Monthly, the number of period is 12, right? So you will just basically like in the first example for gold, all right? For gold, 13.5%, meaning that you need to put it in the decimal form of 0.135 divided by 4, 1 plus 0.135 divided by 4, and the whole will be put into bracket and compounded to 4. All right, the exponent will be 4 there. All right, so follow the formula. It's quite an easy formula to follow, and just make sure that you're getting this correct. But don't forget also to minus 1. Once you've done this calculation, you need to minus 1. So basically that's the formula there, okay? But you have the answers there. What what does you can't even complain about the difficulty of this. This is just basically an exercise to see if you know how to use your calculator. That's basically what it's all about. It's just about knowing if you know how to do your calculations properly. And so there is no other way than you trying it on your calculator and making sure as you're practicing that you're getting the correct answer. All right. There's no further explanation to such a thing. All right. So let's move on quickly to question number two. So as you're looking at question number two, you have a table that is provided to you, all right, with cost. We've done this. It was also in your paper. It's again finding out what is production cost and what is period cost. Okay. Production cost is related to the actual production or manufacturing. What is non-manufacturing? We can safely assume that it's a period cost. All right. For example, depreciation on delivery vehicle. depreciation on delivery vehicle. As you can see, you can understand that it has nothing to do with the production. Plastic purchased, definitely production. But what is important is you need to look at how many, for example, with this particular company, SmartTab, it's a company that specializes in the manufacturing of educational software and tablets, right? That are used in school. How many tablets are they producing? 4,000 tablets are manufactured per month. Okay, so the plastic that is purchased at 450 per tablet manufactured, you need to multiply this amount by the 4,000 tablets. Okay, so I've annotated there to show you clearly, for example, the 1,800K, which is 1,800,000. Where is it coming from, right? You multiply the 450 by 4,000. All right. So do this exercise as well for indirect material that was purchased. Look at the price per tablet with the cost, sorry. We look at the cost per tablet as well as multiply that by 4,000. The depreciation on the delivery vehicle, that will be a period cost, not a production cost. The wages, obviously for operators, we understand that these operators are operating per week, very important, per operator per week. But how many operators? 8 operators. So you need to take all this into account. So it needs to be per week. For in order for you to get to a month, you multiply by 4, and in order to get the total amount, you need to multiply by 8. So you need to multiply by 4 and you need to multiply by 8. So the 950 will be multiplied by 4 and multiplied by 8. I trust that's clear. The rate and taxes is 40,000 per month. All right. But again, read the whole sentence. What is the manufacturing part? The manufacturing takes up a quarter of the total floor space. So it's quite a small manufacturing um, space that they have. So a quarter, meaning that for the 40,000 divided by 4, 10,000 will be production cost because it is related to the manufacturing, and 30,000 will be period cost. Trust that's clear. Depreciation per machine. Depreciation per machine will be in your production cost, right? It will be. But remember, the amount that is provided to you, it's 84,000 per annum. It means for the full year. In order for you to find the cost for the month, you need to divide it by 12. All right? The CEO traveling cost, obviously, it's not directly production. That's why it needs to be period. Sales commission, it's not production related, but it's more related to the selling price. Be careful, look at the selling price. The tablet are currently sold at 2,500 each, 2,000. Okay? The selling commission is 10% of that selling price. So as you can see, how many 10% of the 2,500 is 250. But how many tablets are they selling? They are selling 3,800 tablets. You multiply by the 250 multiplied by 3,800 tablets that was sold. That are being sold, sorry, that are being sold per month. Okay, but that will be a period cost because it's not directly related to manufacturing. Administrative staff salary per annum is provided to you per annum. Remember again, per annum, if they're providing something that is annual, you need to divide it by 12 to find the monthly cost. All right, so that will be for administrative staff. It is not manufacturing. All right, so it needs to be a period cost. And finally, the last one, it's the import taxes and custom duty on raw material. Obviously, this is directly related to the production cost. It's 900 per 150 tablet manufacturers. manufactured. But how many tablets are we manufacturing? We are manufacturing per month 4,000 tablets. So we will take the 4,000 tablet divided by 150, because remember we are paying that import taxes by batch of 150. So we are paying 900 per 150 tablet manufactured. So for that batch, right? So how many batches do we have? 4,000 divided by 150 will give us the number of batches we have. Multiplied by 900 will give you 24,000. That is production related. Carriage on sales. On sales on sales. It's also similar. They provide you for a batch, 600 tablets sold per 600 tablets sold. Okay. But how many tablets are we selling per month? 3,800 divided by 600 will give us the number of batches, and we can multiply that by 1,800. So I've walked you through, and in any case, even if you say, well, Patrick, this is difficult for me to understand, I am providing you the annotation to show you where these amounts are coming from, right? But all of that, obviously, you have the answers here provided to you. But the first question, again, was exactly that. And you should have started by the question. The first question was asking you to complete the above table by calculating the cost per month and splitting between production cost and period cost. Make sure you allocate what is production cost to the production side and period cost to the period side, right? In your answer book, add column for production and period cost and write your answer next to the applicable number. Remember, cost number 1, 2, 3 until 8. Write properly, show all your calculations. Very important. Calculate the variable cost or marginal per table. All right, that is also provided to you. And I insisted again in the annotation I provided to you. Remember that we are looking for the marginal cost, all right? Per tablet. Remember, that's why for all the costs that we have, remember all the production costs. You are not taking into account period cost, you are taking into account only the production cost. Production cost. Make sure it's per tablet. So for example, for number one, we have the production cost of 1,800, sorry, 1,800,000. Okay, sorry. 1,800,000. That 1,800,000 will be divided by 4,000 because we are producing 4,000 tablets per month. So you need to find that amount per tablet. So which is 450. Okay. So the same you're going to do for the remainder of the cost. Obviously, you need to take into account um, there is one cost here, if I can. So you have number one, number two, number four, number one, number two, number four, number five, number six, which is production cost, number five, number six. Now you wonder why is number five and number six not included, but rather number eight. If you look at number eight, if you look at number eight here, number eight, this is the sales commission of 10%. That is included, all right? The sales commission. Sales commission, and then number 10. So number 10, which is the import taxes. So you have the sales commission, the import taxes, and you have the carriage is also included, okay? Carriage cost for the sales, all right? If you remember very well, let's go back to the question. Calculate the variable cost per tablet. Calculate the variable cost per tablet. So as you can look at it, there is some costs that are not included. Why is that? Because you are not going to include the wages of the machine operator. You are not going to include that. You are not going to include the depreciation on the delivery vehicle. You are going to include the direct material, the indirect material. You are going to include the rate and taxes because they will impact on your cost, the rate and taxes. They will also impact on your profit margin. You are not going to include the depreciation per machine per annum. No, you're not going to include that. The CEO traveling cost, it has nothing to do, it's unrelated. What you shall include is the sell commissions because you would need to sell those items, so you need to take into account that cost. You are not going to include the administrative staff salary into your calculation. No, you are not. But import taxes you are going to include and carriage on sale you are going to include. So as you can see again, check which cost will needs to be included. Okay, there are costs that are completely unrelated, but remember again, you need to find this cost per tablet. Per tablet. That's the whole exercise, which will give you a total of 872. Okay, how much are you selling these tablets? These tablets go for 2,500. That's what they go for, right? Minus the cost, 2,500. It's given to you. Additional information, bullet number 3, tablet are currently sold for 2,500. Remember, that's why you read these additional information, very important. Right? You read this information, very important. And basically what you are doing is that the selling price per tablet minus the cost per tablet will give you that income margin ratio, right? So calculate the marginal income ratio for Smart Tab. Remember, it's marginal, meaning per tablet. Okay, so that's what you would get a percentage. So you would take the 2,500 minus the cost. All right, that will provide you the small profit that you get divided by that 2,500 multiplied by 100 in order for you to get the marginal, the ratio, right? Because you're looking for the ratio. Question number 3. All right, so let's move on to question number 3. As you can see, question number 3 is you are an analyst and you have been provided with this information here. Remember again, this is straightforward. This is about understanding what you are calculating. If a student says that he needs to be provided a formula, this is problematic because if you do not understand what is EPS, earning per share, it says it. EPS is earning per share. You take the annual earning divided by the number of shares. That's how simple it is. But if a student says that it needs to be provided a formula for this, this is problematic because it means that you don't even understand what you are reading or studying. Okay, so there are things that are straightforward that you should not worry about. Earning per share is one of them. Calculate the dividend payout ratio. Yeah, all right. That might be a little bit difficult for someone to wrap his head around. Okay, but you understand that it is dividend. Okay, that's what it says, dividend payouts. So what you need to understand is just you take the dividend that is being paid out. The dividend per share is 2 rand divided by that earning per share, and multiply by 100. Okay, so that is something important. And then you have the dividend yield. Okay, you have the dividend payout ratio and the dividend yield. Obviously, these two are percentages, but it's dividend. You always start with the dividend, which is 2 rand. But this time, the dividend yield, you need to divide it the by the price, right? So which conveniently is unknown because you have the current market price that is unknown in the table they gave you. So you need to calculate it. But the good thing is they provided you the book value, all right, per share, which you will take the 40 the total equity, the book value, you take the total equity that you have in the company, you divide it by the number of shares. That provides you the book value per share. All right, so the book value is 40 rand. Okay, now the price divided by the book value gives you what we call price to book value. It says it there, price to book value, price to book value. So you have the book value, which is 40 rand. You have the price to book value, which is 1.25 times. What 1.25 times? So 1.25 multiplied by the 40 gives you 50. So there you have your price. So two, when you're looking at calculate the dividend yield for that company Delta, you will take 2, the dividend divided by the price, which is 50 rand per share, multiplied by 100, which will give you 4%. Practice these, very straightforward. Okay, let's go to question number 4. So as we're looking at question number 4, remember again, you find this in Learning Unit 5. You have on Learning Unit 5 all the annotations provided to you. And in fact, I put everything next to each other for you to understand the comparison between a perpetual inventory system as well as a temporary, or let's say periodic inventory system. All right. Perpetual meaning that we are registering purchases and sales at the same time. Okay, we are not separating the two. But for a periodic, we never know how many purchases, how many issues or sales we've made until the end of the period. That's why the purchases are put separately from the actual issues. Go back to Learning Unit 5. Everything is there, provided clearly to you. But most of the time, I'm not saying that you should stick to it, but I'm saying, like in this example, they're asking you for the perpetual inventory system, and they are saying you need to calculate it with the method of, remember, there's two methods, two inventory systems, perpetual and periodic, and then you have the FIFO, which is first in, first out as a method, as an inventory method, cost method, and then the weighted average cost method. Very similar, but as usual, you will be provided with a series of purchases and sales. What is important here is after marking this good up to 25%, right? So they're saying that the selling price is 5 rand, meaning that you have a selling price, you need to find the cost. If it was marked up to 25, meaning 125%, will represent that 5. This is what we call the rule of the three simples. So if 125% represent 5 rands, what is 100? So you will take 100 multiplied by the 5 divided by 125 for you to get the 4 rands. Okay, let me repeat again. This is the rule of the three simples. 125% represent 5 rand because there was a markup of 25%. So we take 100% plus 25% gives us 125%. That represents 5 rand. That's how they got the 5 rand, which is the selling price. So we want to find out the cost, which is the 100. meaning the cost is before they put the markup, which is 100%. All right? The markup was 25%. So if we are looking for that 100%, we will take 100 multiplied by 5 divided by 125. That gives us the 4 rand. So as you can see there, all right? Very simple. Why are we looking for that cost? Because we have been told on the 1st of September 2021, there were 6,000 units at end. So that's an opening balance. And as you can see, when you will be calculating the, you remember again, you're using a perpetual inventory system. Perpetual means that purchases and issues, which are sales, need to be recorded at the same time. So remember, the dates are very important. They're saying that on the 1st of September, this was the balance, right? You had 6,000 units on hand. You had 6,000 units on hand, right? So you take those 6,000 units on hand, you multiply it by 4, which is the cost, as you can see. So it's 6,000. You don't need to multiply. You don't need to multiply, but you need just to record that that 6,000 it's at a cost of 4 rand. That's what is important here. So that's the balance. On the 3rd, there was something happened. There was a sale of 1,200 units. There was a sale of 1,200 units. So if we take that, that would be in the second column. You have your purchases, you have your issues. That 1,200 units will be at what cost? The cost will be the 4 rand, right? Exactly. So 1,200 at 4 rand. So if from the 6,000 we minus, because we have 6,000, we selling 1,200. Simple calculus, 6,000 minus 1,200 gives us 4,800. 4,800 will still be at the same cost of 4 rand because no new cost has been introduced. Okay? But once we purchase, remember on the 6th, look at the 6th of September. What happened on that day? Is we purchased 1,500 units at a new cost of 5 rand. So now we have now the 4,000 as a balance on that day. We will have the 4,800 that we have at 4 rand plus the 1,500 at a cost of 5 rand. Okay, so it's simple multiplication. Okay, you take, and this is the reason for this annotation, 4,800 at 4 rand multiplied by 4 plus 1,500 multiplied by 5 divided by the total, which is we had 4,800 units plus 1,500 units, which gives us a new total of 6,300. Okay, so calmly I repeat this because this is quite important, right? That's how we found the new cost, the new weighted average. It's very important, the new weighted average. All right, so that's the simple method. The rest is just basically what is purchases, what is issues, what is sales, all right? I've provided you all the annotations and plus they provide you all the workings. So practice on this. But what is important again? What is the most important? Please don't miss the most important part. What is the question that is being asked? Then we need to calculate the closing inventory balance, unit and rand value as at the end of September. Okay, so remember at the end of September on the 29th, that's where we will get our closing balance. After the minusing and the additions, whatever we're buying is a plus, whatever we're selling is a minus. Whatever we're buying is a plus, whatever we're selling is a minus. Remember, that's how we're finding the balance. The balance, in other words, is just to say equal. So if you have 6,000 minus 100 and 1,200, you will get 4,800 plus 1,500, you will get 6,300 plus 3,000, you will get 9,300. I think you understand, yeah, that this is just basic calculation, right? It's plus minus, okay? But in the end, what do you have remaining? You have 8,800 unit that is remaining at the weighted average cost of 5 rand and 93 cents. If you multiply that, that's what you get as total of closing inventory. Okay, that's the total of closing inventory. That's your first question. That's all they were asking you. What about the second question? They said that you need to calculate the cost of sales for September 2021. Cost of sales. All right. Obviously, sales, we only going to take into account the sales part. We only taking into account their sales part. This is what we sold. We sold 1,200, 2,750, and 1,750. So these at their respective rate will give us uh, how much we've sold, right? So the cost of sales, that's what it was we were being asked. The cost of sales is, as you can see in this table, for this case, it's going to be 28,850. Okay. Maybe the next question they will ask is that what is the profit? Okay. So you can take all the sales that you've made, out, multiply by the selling price minus this cost of sales, then you can get the profit. Okay. Simple exercise. Please do your calculations, practice the calculations to make sure that you're getting this correct. Okay.